Good morning. You're almost welcome to today's episode of the Market Snapshot. My name is Norbert Kiiza, and I'll be taking you through the snapshot today. I hope you're all having a pleasant morning. Today is going to be an eventful day as we have the Federal Reserve Bank Conference taking place today. That's going to be in the US session. And without wasting time, I wanted us to quickly go through what the interest rate prep is and the guidance that we are getting currently from the banks with regards to the later conference. So the last time the Fed met, which was in September, around the 20th of September, we saw most of the risk on assets skidding. They really fell. That was around the 20th of September. We saw gold, we saw the US indices. We also saw a lot of, selling coming in also for some of the G10 currency pairs like the Euro USD, the pound dollar, the NZ dollar, the AUD USD. Most of those have been under pressure because of the Federal Reserve indicating that they're going to keep their rates high. So the CME Fed Watch tool, which we use to track the probability for interest rates hikes or hold, is currently pointing towards potential hold of rates. And if you check it out today, you'll be able to see that it's showing the probability that the rates are going to be held at 96%. Okay, there's a 96% chance that the rates are going to be kept within the target range of 5.25 to 5.5. So you can see they have actually increased now to 99.7%. So today, even of course, as we go into the session later, we will expect to see what happens with the dollar, and we could potentially see a stronger dollar as we go into the conference, rather a weaker dollar as we go into the conference. So the guidance that we are getting from the banks, we are going to go through one of them one by one. So for now, we are going to start with ING. So ING, we are seeing that the widely held view among economists surveyed is that the US Federal Reserve will leave the Fed's target range unchanged at 5.25 to 5.5. They're also indicating that the Fed could hint on potential headwinds for activity in an environment where mortgage and car loan rates are already above 8%. So as you know, what we are currently seeing in the US is that their interest rates are rising quite speedily, and we are seeing that taking a toll on the consumers, those that are currently holding debt, if it's car debt or it's home debt. We are seeing most of those rates rising, especially for those that were not able to lock in fixed rates. So now, the last time when we had the Federal Reserve Conference, that was in September, the Fed chair indicated that the reason why they want to keep their rates higher is simply because there's this issue of long and variable lags. So whenever they do any kinds of rate hikes, what usually happens is that we normally tend to see that it takes time for the policy to actually have an effect, and for us to see that kind of guidance usually that the Fed wants. So whenever we see a delay on that, then we shall see the Fed, keeping rates at the levels they're at. So ING is looking towards the rates staying at a target range of 5.25 to 5.5. Wells Fargo has also indicated that the rates are likely to stay on hold, and we could see, some kind of a reaction towards that. And I do not really think the markets are going to react when we get a hold. They might react later when we get Powell speaking. So JP Morgan is also indicating that the FOMC voted to leave the federal funds rate unchanged at 5.25 to 5.5 in the September meeting, and they're also expecting that this will also going to be able to remain even as you go into as you go into this this particular meeting for this month. Okay, so that is what we are seeing from the banks. And quickly, let's quickly go to the economic calendar and see what we can expect to observe during the day. So for today, Wednesday, during the earlier session, which was the Sydney session, we saw NZ economic data coming out. That was for the labor data. We saw the unemployment rate increased from 3.6 to 3.9%, which was good for that particular currency pair. Moving into later into the session, we saw the Kaikin manufacturing PMI also had a slight decline from 50.6 to 49.5. And we saw that, of course, had an impact on some of the Asia currencies like the Australia dollar, which of course has been in a bit of a decline. We also saw that impact also playing out on the NZ dollar. So of course, the main highlight for today, which of course should be our major focus, is the ADP as well as also the Fed conference. So ADP is coming out, I think, about 1 hour before the beginning of the US session. And for ADP, we're expecting that there's going to be an increase from 89,000 to 150,000. And of course, if we get a higher employment figure there, we could potentially see a stronger dollar. And the other thing, of course, is the employment data that we have been getting from the US has been quite strong. We are seeing very strong data coming in from for the labor data. We're also seeing very strong GDP data. The recent GDP data we got from the US indicated that the GDP for the US had increased from about 2.9 to about 4.3%. So that is really providing the dollar a lot of strength. Crossing later to ISM, which is expected to come out at 5 p.m. These ISM PMIs have sort of like held their ground at 50, but we're expecting that if we get higher readings here for these ISM PMIs, as well as also the new orders index, we could see a stronger dollar, as well as also a stronger move higher also for the US indices. Keep in mind, if you're trading any of the US indices, take note that we are still in the earnings season. So a lot of what we are going to see, we know with the movement on the Dow and the Nasdaq is majorly going to depend on how those earnings pan out. So the major highlight for today is the interest rate decision. Okay, so the interest rate decision, we might get an initial move higher, since them keeping the rates on hold is seen sort of like as a good thing for the risk on assets. So euro dollar, if you're trading pound dollar, if you're trading gold, there could potentially be some move there. However, what the major focus for today is going to be this FOMC press conference, which is at 9:30 East Africa time. If we get any indication from Powell that they are still focused on having their rates higher, and also if they tend to also gauge that based on the recent September data, they are still not seeing the market or they're still not seeing the economic data moving in accordance with their policy expectations, they will maintain the hawkish stance that they presented in their previous meeting, which was there in September. Okay, so without wasting time, let's quickly cross over to the charts so that we can see what is happening over there. So for the charts, I'm going to start with gold. Gold has been on the spotlight recently. We saw that it actually was able to break through a key level of $2,000. That was on Friday. And of course, that move right now has formed some kind of a double top, as you can see. This double top right now seems to be holding quite strongly. And gold almost seems as though it is now potentially starting its move lower. Okay, now the reason why we could expect gold to stay weak, okay, and of course move back to this range down here is simply because any kind of escalation of the war, okay, might not really allow gold or favor gold to stay higher. So keep in mind that gold has been on an upward trend. You can see how it has been progressing higher. And this, of course, has majorly been because of the escalation of the war. Now, the most recent spike we saw on gold was because of the ground invasion. So when Israel invaded Gaza on ground, okay, their forces went on the ground, and we saw a full-scale invasion. We saw gold spiking all the way up here. And now, after a very strong liquidity grab that we saw yesterday during the US session, we saw that it actually filled this imbalance, and now we are seeing it on a downward move. So the kind of structure that gold is actually starting to do is something almost like this, where we saw that there was actually some bit of a bearish flag that formed here, which gold, broke below. And if we see another bearish flag starting to form here, we're going to get something like this happening, and gold could weaken further, taking it back to this zone, which it was last at. That was on the 23rd of October. Now, there have been some indications recently that some of the central banks have been piling up on their gold purchases. And of course, that might have a ripple effect on the value for gold, where we could see it potentially weakening lower. And of course, this weakening might also continue into the rest of Q4. Okay, so going into Q3, going into Q4, and of course Q1 of next year, we might see gold weakening. Now, if we get any kind of dovish indication from Powell that the Fed will continue to observe incoming data, if they indicate to us that the incoming data has been, moving or progressing closer to what they expect, and of course, if the recent inflation data points to them to have some kind of a dovish stance, we could see gold, it may be rallying a little higher, taking a bit of liquidity here, and then of course potentially having its final move lower. Okay, so that's what is possible for gold. So somewhere around here, closer to this level here, we could see such a move possibly happening for gold. Now, crossing over to GBP/USD. So GBP/USD, as we know, if you go on the calendar, you'll be able to see that we have a key, BOE conference, which I think is supposed to happen tomorrow, if I'm not mistaken. So that conference is right now, I think, the major catalyst for any movement on the pound. And that is essentially going to provide guidance for where the pound could move. So of course, yes, we might have some kind of reaction from today's FOMC, but I suspect that if we get if you look at the BOE MPC votes, you can see when you look at the Bank of England Monetary Policy Committee's vote cut, we are seeing that none of them is looking for a vote cut. But you can also observe that those that are going to vote for a hike, there's a decline. There's an expected decline there. So this could be, bullish for the pound, and we could get the pound having, a move higher on that. Okay. So tomorrow, we're going to have this BOE conference, as well as also release of the MPC meeting minutes. So the conference is going to be at 5:15, and then we're also going to get these meeting minutes released at 3 p.m. So if you're trading the pound dollar, that should be your major focus for now. And of course, any movements on the pound dollar is majorly going to depend on that. So for now, the play for today, we could get the pound moving higher, potentially maybe filling this gap which it formed sometime around, let's just see here. This was on the 24th of October. So if we get any move here, if we get any dovish indication from Powell, you know that they might consider maybe switching back on their dot plot. And if we see any changes in the dot plot that the rate cuts are going to come in 2024, later in 2024, then we could see the pound rallying and potentially filling this gap. But for now, that might not be possible, especially knowing that the Fed really is inclined towards a hawkish stance. We could see some kind of weakness there for the pound. Yeah. So of course, if you look at how the price action is at this zone here, you can see that there has been some kind of stickiness to the upside. There hasn't been that much, selling intensity for this particular currency pair. And every single time we have been getting into this zone here, we have been seeing how the pound has been, holding ground there. So it could be that a temporary bottom could be in for this particular currency pair. And of course, any indication from the BOE tomorrow is going to, could have an impact on how the pound performs. So, but for now, we have to see how it plays within this zone. So it could have a movement that could take it back to this level here, which of course will allow us to see if it could continue higher or start selling from that zone. So crossing over to Euro USD. So Euro USD, of course, yesterday we saw GDP data that was released. The Eurozone is sort of like going into some sort of like stagflation, okay? The reason for this move lower, which we saw on the Euro USD yesterday, was simply because of the GDP data that was released. So that GDP data disappointed to the downside, and we have been seeing that the euro actually formed a resistance at this zone here, which it earlier had. So we had a retest of this area here, which happened somewhere around here. And of course, this move was majorly because of the GDP. So if we go to the calendar, you see that the GDP actually disappointed yesterday, and policymakers are almost inclined to keep the rates higher. And the reason for that is that they do not want a situation where they have the inflation coming back and haunting the Eurozone. So as you can see, the GDP went into negative territory. That was quarterly GDP. But you can also notice that the GDP year over year disappointed. It dropped from 0.5 to about 0.1%. And this, of course, this data came out at 1 p.m. So I think this decline here is the reason why we saw that very sharp move lower on the euro. Okay, now I also want us to quickly look at some guidance here from some of the banks. So as you can see, the ECB is really trading carefully. They are not looking at hiking their rates. The reason for that is, of course, rather on cutting their rates. Reason for that, of course, if they happen to do any kind of rate cut, that could have, sort of like a ripple effect where we could see the euro, visiting some of these, conditions that it was in. That was in the 1970s, where they had an issue of strong economic slowdown, and of course they also do not want to be behind the curve where they try to control inflation and at the same time inflation comes in much higher. So I think for now the euro is going to be under a lot of pressure, and of course that will have an impact on how the euro performs. So if you're trading Euro USD, keep in mind that we could potentially get some weakness there, even as we go into the ECB conference. We could potentially see some sort of a weaker euro. So of course here, some guidance from Creditor Grill. They're saying the latest inflation data together with somewhat better than expected Q3 GDP have helped ease the Eurozone stagflation fears in a boost to appeal of the euro-denominated assets. Yeah, so of course, we got positive Q3 GDP, okay? Rather, we got a positive year-over-year GDP. That was for Q3. But keep in mind that this one here went into negative territory. That was the quarterly one. So of course, this is not appealing for the euro. So for now, what we can expect there, we might get maybe a bounce off this zone, especially as we go into the Fed conference. But if we get any kind of hawkish stance from Powell, the euro is going to potentially move lower, and we could see it breaking through this area here where we had a very big OB, which has been holding its ground from around 13th October all the way to 30th October. We saw that to 20th October, we saw that actually the price was failing to break around this zone here. There were a lot of sweeps to the upside. So if we take out this bullish OB here, then it means that the euro potentially is going to start moving lower, and we could see it, breaking through some of these zones here. So for now, let's keep observing, and we see how how it plays out. And now on the flip side, if you see how the euro has been moving, it's actually been having some kind of a structure which shows that every single time it touches lows, it tends to have such kind of structures, especially at this zone and at this zone here. So we need to get a fully blown break lower, which is majorly going to depend on what the Fed guides, and of course that will set the pace for how the euro moves, later into the day and also later into the week. So let's just keep, just keep looking at that and see how it plays out. Crossing over to Nasdaq. So Nasdaq, the reason why Nasdaq did not break below this level was simply because of very strong Amazon earnings. So Amazon, reported some really good earnings. That was on Thursday, after the close of the bell. And we saw that even when we saw that very strong, data coming out, not data, rather news coming out from Israel that they had invaded Gaza, Nasdaq failed to sell. It didn't sell that much, and that was because of those strong Amazon earnings. So I suspect that we could get, this tech index starting to move higher. It's currently forming an ascending triangle here, and if we break above it, we are going to see it, trying to move, potentially getting back into this zone where we had the last supply area. So of course, if we buy into this, if we break above this ascending triangle here, we are going to see Nasdaq, potentially moving higher here. Now, what I can also guide you is that tomorrow Apple is going to release its earnings after the close. So if we get strong earnings from Apple, it's going to set the pace for this index. Okay, keep in mind that Apple is a heavy component of this particular index, and strong Apple earnings are going to allow this index to flourish higher. So for now, let's just keep observing to see. However, you can see that the 200-day moving average is still fairly above above the shorter period moving averages. So for a strong change of trend, we need to have this gap closing of these two averages and a crossover that could potentially help us to move higher. However, on the flip side, if we get disappointing Apple earnings, the Nasdaq is going to continue its sell, which it has been having from August, where it could test fresh lows. That could take it, lower and lower. So if we go on the higher time frames here, let's just quickly go to the daily. So if you go on the daily, you can just check and see the kind of trend we're having, on Nasdaq. So you can see that Nasdaq has actually been having structure breaks. It broke its first structure here, broke another one around here, and right now, it is trying to, make some kind of comeback there. If we break below this zone here, we are going to see Nasdaq potentially moving closer to correction territory. Okay, so if that happens, then we are going to potentially see a weak index. But for now, what markets are really focusing on are those earnings of Thursday. So if Apple's earnings are really what is going to set the pace for this particular index. Yeah. So let's quickly go to, I want us to check out the Dow. So the Dow, of course, had a very nice ascending triangle. And of course, this gap had to be filled. The reason being is that the selling intensity that the Dow had from Friday was quite intense. You can see that it did not even hesitate to stay within this zone here. It immediately bought. So I'm expecting that we are going to see price action within this asymmetrical triangle here. And I think immediately after we break price action either below or above it, we are going to see the Dow testing new zones. Now, for now, my main area of interest is where I'm seeing this area here where we had supply. So if Dow manages to get back into this zone, okay, we could get a fake out that could take us slightly higher above this area here. Okay, and of course, once we get into here, we could potentially see that Dow making some sort of like a lower high that it may form somewhere around here. Okay, so now the other thing is that I think some of the companies that have been reporting earnings, if we talk about the banks, which of course contribute a lot to the Dow, the banks' earnings are quite strong, but we got some disappointing earnings from some of the energy companies like Chevron, as well as also ExxonMobil. And of course, those are what actually created this sale which we saw, okay? So this sale which we saw around here was majorly created by those energy companies. So if you go on FinViz, you'll be able to track that. So just go to FinViz and just see how the energy companies are doing. You'll be able to tell that, of course, you know, there's some sort of indication of, you know, of a weaker, you know, some sort of like weaker companies. So we're going to just come and check here on the groups. We are going to check on the 1 week performance. So if you check 1 week performance, you can see energy is a laggard here. And of course, communication services are also one of the big laggards. So the only thing that is holding up the Dow is actually the utilities, which is up about, I think, 4.3%. But the consumer cyclical, we're also seeing energy. Those are very big laggards for this particular index. So now I'm expecting that if those laggards still persist, then, you know, I don't think that Dow will have that much of a move. If we break below, you know, this part of the symmetrical triangle, then of course I'm expecting that the Dow will have a fully blown sell, you know, which could, you know, take it testing these lows that it had. Now, keep in mind, guys, that around this area here, where we saw the Dow, you know, moving lower and of course shooting back higher, there is not that much you know, supply seated at this area here. And of course, every single time the Dow reaches this zone, it immediately gets a lot of buying. So if you go on the higher time frames, you'll be able to tell that we need to get a fully blown sell for the Dow to get into any kind of, you know, selling intensity. But for now, you can see that the buying is actually quite strong. This area here, where we saw the Dow moving higher, this was simply because of the, you know, the after effect of the SVB crisis. Okay, so this SVB crisis, you know, when the Dow, when it was priced in, we saw Dow rallying from there. So we need to get some kind of either some sort of like escalation of the conflict for Dow to, you know, to take out these levels here. But if that does not happen, we could then see it, you know, creating potentially another, you know, lower high towards this zone here. And of course, then not moving lower, potentially then looking at, you know, starting its move up higher. So that is what we can expect for the Dow. So of course, for now, that is what we can have for the Dow, and we just have to wait for the FOMC and see the effect there. So crossing over to silver, silver has been having a lot of bullish flags. And of course, these bullish flags have actually been supporting a higher silver. So you'll be able to see that we had one here. We also had one forming around here. But currently, just like how gold has given up its gains and is starting to move lower, we're also seeing the same thing happening for silver. And if we manage to take out these areas where we had grabs, then we could potentially see silver moving lower and potentially testing the bottom part of this descending wedge, which will be somewhere around here. So somewhere around here is where I could expect it. The next possible bounce for it is going to be potentially somewhere around this line. Okay, yeah, that's what you can expect for silver. And of course, you can see that we had the last liquidity grab to the upside that, of course, was not able to sustain, and we saw that price moving lower. Now, to speak about oil, oil has been on a downtrend. The reason for that has been, despite Russia and most especially Russia, we thought that Russia was going to, continue with its, its supply cuts. But the supply cuts are not providing any kind of impact on oil. And we're also seeing that despite the escalation of the Middle East conflict, there isn't that much, there isn't that much reaction on that from oil prices. However, the World Bank indicated yesterday that they're expecting that oil prices could average at $90 a barrel, which is about, I would say, $7-8 below where oil is trading at right now. And they are saying that that could then average into $81 in 2024. So their catalyst for that is that there's a potential escalation of the Middle East conflict that could, of course, send the oil prices spiking higher. So I think really that is, I would say, the major driver for any movements for oil. And we have to just keep focusing and seeing essentially how that plays out for oil prices. Now, of course, if you come and look at oilprice.com, they will be able to show you what the guidance is here. So you can see that Russia's oil exports climbed despite its commitment to cut supply. Okay, so of course this is really showing to us that despite them providing, them wanting to follow what they agreed with OPEC, that they are going to be focused on supply cuts. Yeah, their oil exports rising, dense supply, and of course to the upside. And I suspect also because of weakening demand, that's the reason why we are seeing that some of these economies like the Eurozone and of course even Asia, that we're having a sort of like disinflation, which is an indication that demand is weakening. And when you have instances like that, it normally, builds up the case for weaker oil prices. So I think that is something to watch. And of course, if you're trading oil, you just have to wait and see how that, the impact of that really on oil. So that's what we can look at. Yeah. So I think that's it. I'm just going to now look at your questions. And of course, for oil, like I've said, it's still on a downtrend. And, its structure also is, it's having a lot of break of structures. You can see we had one here. We also had another one here. It's potentially also going to form another one here that could allow it, to, move lower. Okay, so it's time for questions. If you have any questions whatsoever, please type them in the chat so that, we handle them and we see, we see how to move from there. Okay. So Casper, you're saying, morning, Norbert. Good morning. How are you doing? I hope you're doing amazing. Francis, how are you? I hope you're doing awesome. Ronald, good morning. How are you doing, Ronald? I hope you're doing okay. Samuel, Pina, you're saying morning. Oh, good morning, Samuel. I hope you're having an amazing morning, Samuel. J Squad, how are you doing, J Squad? It's been a minute, J Squad. I hope the markets are doing you great. and you're doing awesome. Yeah. Do you offer mentorship program? Yes. At the moment, actually, I do not offer that. I do not offer mentorship at the moment. Yeah. Okay, let's look at the other questions. Mana, how are you doing? Mana Basto, I hope you're doing amazing. I hope you're having an amazing trading day. Uh, then, oh, we have someone joining us from Miami. Oh, Lona OFX, you're most welcome from Miami. I hope Miami is doing great and you're having an amazing time over there. Uh, yes, Ugandan traders, hi. Hi, Kimei. I hope you're doing amazing, Kimei, and you're having an amazing time. Martinez, you're saying, what are you thinking on FOMC? Yeah, so for FOMC, I think we can expect to get some sort of like hawkish stance from Powell. So if we're looking at some of the different risk-on assets, if we're looking at some of the different risk-on assets, you know, like the pound dollar, of course, the pound is an outlier, I would say, simply because tomorrow we have a big catalyst on it. So of course, any movement here, of course, the structure that it's forming here is an uptrend, which of course we can be able to see from this. You can see how it's moving. There's some sort of uptrend there. So we could see the pound moving higher. Of course, it will move higher if we get any kind of rate hold. So it could achieve this high. And of course, any movement either towards this area here or potentially breaking where we had these, these liquidity sweeps to the upside is majorly going to depend on the Bank of England, conference that's going to happen tomorrow. Yeah. Then let's continue. Just a moment here. Just want to wrap this. Okay, so loyalty, you're saying look at GU. I think I just looked at GU. Samuel Pina, you're saying please repeat the EU. So for EU, the guidance I gave on that one, the guidance I gave on that one was that we could see a weaker euro. And that, of course, is premised on the fact that we've been seeing weakening economic data from there, both on inflation and also, and also GDP. And of course, the ripple effect for that, if you're trading a euro USD, that, of course, is one of the reasons why we are seeing, some kind of weakness there. Now, you can see, guys, that the sell that we saw on the euro USD was actually quite strong. You can see how it immediately, moved away from this area here. And of course, the downtrend is actually looks really quite strong there. And of course, if you see the structure we're having here, it's changed ever since we broke this zone. And we are seeing that right now we're having something like this, okay, forming. So we could potentially see maybe the euro buying today. If we get any kind of a dovish stance from Powell, the euro could recover and buy. But the GDP data we got for Q3 is one of the things that is really limiting any upside for the euro USD. So regardless of dovish stance from Powell, it might not really benefit the euro that much. And of course, you could also monitor how DXY moves, because any movement on DXY definitely, of course, affects how the pricing, comes in for this particular pair. Yeah. Yeah. So, Joseph, you're asking about the Apple earnings. The Apple earnings are actually tomorrow. That's on Thursday. So I think you need to wait for them. You can actually track those here. So if you go to investing.com, you can just simply check out the earnings. You just have to go here, check on the stocks. No, on the earnings calendar. Just simply click earnings calendar. So when you click earnings calendar, you come here, you can see Thursday. So for Thursday, we have Apple right here. Okay, so Apple, that's going to be on Thursday after the close of the US session. So those earnings are going to drop at about 11:30. That's if you're during East Africa time. Okay, you can expect us there to there could potentially be some movement there. And of course, Apple being one of the most valuable companies, and of course large companies in terms of market cap, there's going to be some impact there. If you're trading, if you're trading the Nasdaq and the Dow, you really have to focus on how the Apple performs, because there will be some sort of ripple effect on the performance there, rather on the movement of of Apple. So yeah, the last earnings we saw when Apple releases earnings was the 3rd of August. We saw that there was actually an impact on the indices. If you go and check on the Nasdaq, you'll be able to see how the Nasdaq moved. Okay, so for Nasdaq, you can come and just go to August. You see that there was actually some sort of move lower. Okay, so for the Nasdaq, just go to August there. So the 8th of August, yeah. So 8th of August, which was somewhere around here. There was that move lower when the earnings were released. So the earnings, I think, were released somewhere around there. And you see, ever since those earnings were released, we saw the Nasdaq selling all the way into later into the August. We saw it moving, lower. And of course, the reason for that was because of the guidance. Now, keep in mind, the latest catalyst for any move on the Apple share, has been because of the forecast for their sales of their iPhone 15s have not been looking that great. So we have to monitor and see if there's any kind of if there's good forward guidance for their Q4 earnings, as well as also sort of like if they give us forecasts for how they are going to sell their iPhones that they have just released, as well as their MacBooks, which they just released, that was on the 30th, then of course there's going to be some kind of reaction there. So just monitor to see, how that impact is there. But we expect that the earnings are going to be good. Awesome. So I think that's it for today. I wish you all an amazing time. And I'll see you all next week for the next episode of the Snapshot. Just what you're saying, link me up with one of your students if you're not in position 2. Yeah, definitely. I think we'll be in touch, Just Squad, and I'll be able to guide you on that. You have my email. You can reach me up on my email, or you can reach out to me on my socials, and I'll be able to respond there, Just Squad. So just reach out to me on my socials, and I'll give you some guidance there. So awesome, guys. I wish you all an amazing trading day, and we'll be able to follow up. Pashwa, you're saying CAD CHF. Okay, I do not have CAD CHF open here, but I can just quickly check it out for you. I think within a moment. So CAD CHF, let's see. I don't know whether I have that open on my. Do I have that open? I'm not so sure I have that open. Let's see here. CAD CHF. CAD CHF. I don't seem to see it here. Okay, seems like it's here. So I think the major driver for any movement on CAD CHF might be the oil prices. Of course, I don't know how it's been doing or it's been faring. It seems to be in an uptrend there. Yeah, so our 200-day moving average seems to be way below the shorter period moving averages, which I think is an indication that this particular currency pair is in some sort of an uptrend. Yeah, so I don't know what time frame, Pashwa, you were focusing on, but I think we should see some kind of continuous move higher. We saw that there was a very strong crossover at this point right here, and that crossover was followed by a move higher. So I'm thinking this might be a buy. given the kind of price action we are seeing there. You might also want to, do some sort of like sentiment analysis for it and see what the sentiment is for these two currency pairs, as well as also see which of them has a higher interest rate differential. So if it's the Canadian dollar, then that of course might indicate that there's some kind of an uptrend there. But this crossover seems to lock in the deal for us that there's some upside momentum there. But of course, it really depends on what you're analyzing. But there seems to be a lot of demand for an upside move here. So just keep monitoring it and see how that plays out. So I think that's it. I wish you all an amazing trading day. Make sure you manage your risk, and of course I would not really recommend getting into trading, of course, when Powell is speaking. You might want to wait for when the the conference is done, and then trade the after effect of the conference. So I think that's it. I wish you all an amazing day, and I'll see you all during the next episode of the Snapshot. Have an awesome trading day, guys, and cheers.